This video is on another general journal activity. Right, the first transaction tells you that a debtor gave the business stock for 800 and the remainder of his account must be written off. In this entry here, 3 accounts are going to be affected. Trading stock, bad debts because he's not giving us the entire value of his account, and then obviously your debtor's control as well. Alright, so if you have a look here, the entry that you're going to need to make here, trading stock will increase, your asset increases because he's giving us stock. Bad debts is an expense here, so you will need to debit your expense, and then P. Smith, the debtors account, will decrease by the full 2,000 Rand. So you're going to credit his debtors ledger account, that's this 2,000 over here, and whatever you do in debtors ledger, you go to debtors control, and you do the same thing. The second one, the owner took stationery and stock for his own use. Once again, we're going to have 3 things that change here. Drawings is going to be 1. He's taking stationery, that's the second. And the third thing he's taking is trading stock. So the entry you're going to need to make here, you're going to need to debit your drawings account. Drawings is negative owner's equity. It decreases your owner's equity, so it increases on the debit side. And you'll notice that I put 2,550 there. That is because stationery is decreasing by 50, and trading stock is also decreasing, but by 2,500. So the total value of the drawings here of the owner is 2,550. Number 3, when an EFT payment for 765 was received from a debtor whose account had previously been written off, the debtor made the following entry. They debited bank and they credited debtor's control. Now there was nothing wrong with debiting bank here because you received money. However, this credit of 765 in debtor's control should have actually gone to bad debts recovered. So we decreased debtor's control by mistake, so therefore we're going to need to add back to debtor's control. So we increase our debtor's control and asset going up, and we credit bad debts recovered, which is income increasing. The next one, the business owed 6,000 Rand to Alpha and the account was 4 months overdue, and they charged interest at 12% per annum. Right, start off by calculating the amount here. The amount owed here was 6,000. We multiply that by 12%, and then we are only going to get charged for 4 months of the year. If you record that there, that will give you interest of 240. You debit interest expense and you credit alpha. Interest expense is an expense increasing, and alpha is a liability going up. Whatever you do to alpha's account here, you're going to do the same over here. Alright, the next one. A credit note received for equipment costing 505, which was returned to ABC, was entered in the books as 550. Okay, for this one here, if we are receiving a credit note, it means we're returning. So we entered the return as 550. So we took down ABC's account by 550, but you actually only returned 505. So therefore this one here, you're going to need to add back to what you owe the creditor, as well as back to the equipment. We decreased the equipment by too much, and we decreased the creditor's account by too much, so we're adding back what we owe to that creditor. Okay, then the next one. The owner took stock that had a cost price of 480 and a selling price of 700, and the bookkeeper recorded that its selling price in error. Alright, remember the owner always takes cost at selling price. So at cost price rather. We increased drawings by 700. We should have only increased it by 480. So to correct that error there, you're going to need to add back to trading stock because you took it down by too much, and also minus from drawings because you took drawings up by 700 instead of the 480. So you need to add, take away rather, from the drawings account. Okay, the next one, an invoice issued to Beta for 5,000, cost 3,000, was recorded as 500, cost 300. Now for this one, we're going to need to do 2 entries for the selling price and 2 entries for the cost price. If you have a look at the selling price first of all, we recorded a sale as 500, but it should have been 5,000. In other words, we need to add to what Beta owes to the business, which is 4,500. Our sales also needs to increase because we said the sale was 500, but the sale was 5,000. So you need to increase your income by the difference. And then for the cost of sales amount here, we recorded the cost price as 300, you should have recorded as 3,000. So to fix that entry up there, we need to add to cost of sales 2,700. When you sell stock, you decrease trading stock, but we only decrease it by 300, so we need to decrease it by a further 2,700 to give us the correct total of 3,000 rand. Okay, then the next one. Charge Theta 65 Rand interest on its overdue account. If you charge a debtor interest, that increases the amount that is owed by Theta to the business. So we debit Theta's account in the debtor's ledger as well as in the debtor's control account. And then interest income, once again, as the name suggests, is an income, and that income is increasing. Okay, and the last one here. The business refunded a debtor using petty cash as he had overpaid his account. Instead of recording the refund as 100, the bookkeeper recording the amount as 10 Rand. Now this can be very confusing, so the way I suggest you approach this, it's easy to figure out what should have happened to petty cash. So we use petty cash, and we recorded that petty cash went down by 10 Rand, but it should have gone down by 100 Rand. So to fix this up, you need to decrease petty cash by a further 90 Rand. And then the double entry for that means the debtor must be debited. Now the reason why the debtor is being debited here is because if he overpaid his account, he's sitting with a negative balance. Once you refund him, you don't owe him anything. So you should know to go from a negative number up to 0, you need to add 90. But as I say, it's easier to think what you would have done to petty cash, and then the opposite is going to apply to your debtor's control. Now one thing I didn't do in the worked example on this is I did not total this general journal. This general journal needs to be totaled just the debtors control and the creditors control columns, because these are going to need to get posted to the general ledger account. Okay, I hope this is of use to you as an additional general journal activity. Thank you.